Ladies and gentlemen, welcome to part two of our analysis for the Dow Jones and what we believe is going to happen going forward here. Today is August 26th, and if you recall, yesterday we talked about the cycle clusters that our software generates, the red lines, and we talked about two possible short-term scenarios or even mid-term scenarios where the Dow is essentially looking for a top. We have a number of important time turning points coming up. Those are more or less short term, but they can also be interpreted as long term if we consider today's market environment. So one of them is arriving as we speak. And yesterday I talked about the possibility of yesterday being the top of this short-term move higher. Then we're going to correct into, let's say, September 1st plus or minus one trading day, and then subsequently bounce one more time into September 8th, I believe, plus or minus one trading day time turning point, at which juncture the top should be, a major top should be put in place, and then subsequently the stock market begins to decline. Or the secondary scenario was that we kind of trade around today's levels until all cycles come together into a singular point, and the same top that we anticipate is indeed put in place. So once again, considering today's market action, it's still too early to tell which scenario is playing out, but it is quite possible that scenario number one, where we sell off into September 1st, is indeed being realized at this juncture. So that was the clusters that we talked about. What I wanted to talk about today is cycle composites. If you're familiar with these cycle composites, are somewhat similar to Hurst cycles, if you're familiar with that particular concept, where you break down the market and try to ascertain which cycles are playing out in a stock market or individual stocks or whatever it is you're analyzing at any particular juncture. But the concept that we use is much more complicated than that, because what we've done is we realized over the last many years is that not only are there up and down composites responsible. So, for example, the up composite is responsible for tops, and the bottom composites is responsible for the bottoms that occur in the market on all time frames, whether you're looking at the long term or short term hourly chart. So they're separate, but not only that, there are also multiple composites. So the composite you're looking at is just one of them, but there could be two or three separate composites for whatever financial instrument you're looking at. Now I'll explain that in a second. I'll show it to you in a second. So in this particular situation, or before I get into that, what our software does is, once again, it scans the stock market or whatever financial instrument you're looking for, and it generates the cycles according to major tops and bottoms. It picks out, and then it breaks down those cycles from very long-term cycles. So, for example, the 10-year cycle here on the Dow Jones, to short-term cycles. So, since we're looking for a top, we're not going to be talking about the bottom composite, which isn't very important, because what happens actually is they come together to generate a singular composite that, when put together properly, should match the stock market itself very closely, or the output that you see here on the chart. So for the time being, let's remove the bottom cycles. Let's concentrate on the longer term cycles here on the Dow Jones. And before I get into that, I wanted to show you another composite that traces the stock market very well as well before we get back into that. So let's go and see that one. So this one is very good. It for the top composite, for example, we have 2000 top. It matches 2007 top. It then hits the 2015 top, and then it projects into 2023 as the next major top for the market. For the bottom, it picked out 2002 bottom, the 94 bottom as well. It doesn't show up here on the chart. Picked out 2009 bottom, 2015 bottom, and subsequently it's projecting the bottom here in 2023 as well. So essentially what the point of this is show you with clarity how these composites can be determined from the stock market, or once again whatever financial instrument it is that you're looking at, And then once you put them together, once again, it should very closely match the overall output of the stock market. So this is the secondary composite of what we're looking for. We're not going to take a look at it today because it's not important at this juncture, but this particular composite is important. There's a powerful 10-year cycle in the stock market, so it picked out the top here, top here, top here, and now we're pushing into this smaller cycle. There is a derivative of this cycle, or basically they half and half and half from the largest cycle that the stock market picks out, and it's projecting a major top right here at the software says August 16th, but it has a little bit of variability associated with this. So for all intents and purposes, or as we break down into the shorter term cycles, we can concentrate on much better on that particular time turning point. So let me break it down a little bit further so you can have a better understanding and kind of zoom in here a little bit on today's environment. So as you can see, all of these cycles are projecting into the August 16th time turning point, but since this particular composite comes together with clusters, we have to also take that into consideration. So since we are looking for an important top at this juncture, we have to combine both the clustering and the time cycles associated with these composites. So this becomes important because both are projecting a significant time turning point and a significant top here, and that's what we concentrate. That's why we're concentrating on these upcoming current September 1st and September 8th time turning points, because they are all projecting a significant top occurring, and then subsequently the market turning around and selling off. So these are some of the tools that we use, and of course it's important to kind of tell you that when the software is functioning properly, it is doing it all automatically. So it's looking at the composites, it's looking at the clusters, and it's determining exactly where that time turning point is on both the long-term scale and the short-term scales with high degree of probability. And then the tools that I'm going to talk about tomorrow narrow down the window even further. So essentially what's happening is that we are laying various layers of analysis in terms of both time and price onto the stock market chart, and that gives us output exactly where upcoming time turning points are going to occur. So this is what we're going to talk about tomorrow, is the 3D calculations of where we anticipate the actual tops to occur, and that unifies time and price. And with that continuation of the analysis, it's going to become much more clear exactly where the top is going to be in both time and price, and hopefully we can make those projections and anticipate what the stock market is going to do. So over the next few days, so tomorrow I'll do the three-dimensional analysis, and then we'll tie it all together into a singular analysis where we combine time, price, and three-dimensional calculations in order to ascertain exactly where that particular time turning point, or where that turning point for the stock market is. So I hopefully you found this interesting and helpful. Thank you very much for your time, and we'll be back with another update, with another set of analysis tomorrow. Have a good day ahead. Bye-bye.